With the economy headed for a possible recession based on recent market conditions, which undervalued stocks would be a great addition to your portfolio right now? In this video, we'll go over 5 stocks that are positioned to shoot up and be great investments to add to your portfolio. So about 2 months ago, I made a similar video where I called out 5 undervalued stocks. I spent roughly $1,000 on each stock, totaling $5,072 on May 29th. As of August 2nd, those stocks are now worth $5,531 with their dividends reinvested. That's a return of over 9% in roughly 2 months. And for comparison's sake, the S&P 500 was up around only 1.5% in that same time frame. And throw in the fact that one stock in that list in GPN struggled during that same time frame and was almost down 5%. Just highlights how great the other 4 stocks did, with Prologis up almost 18%, Johnson & Johnson up over 13%, CVS up over 10%, and Comcast up over 5%. You can click a link right here to see that video if you're interested. And before we dive in, let me know in the comments any stocks you're seriously considering adding to your portfolio and why. Also, if you're liking this type of content and interested in seeing more, press those like and subscribe buttons. It really helps the channel out and lets those YouTube algorithm experts know they got it right, showing you this video. So, which stocks made it on my list for August of 2024? We'll get to that very soon, but I want to go over what requirements and metrics I use to narrow down the list of stocks to help pinpoint the companies that are ready to take off in the near future. The first requirement I have is that the company have at least $10 billion in market cap. Focusing on companies that have a market cap that size or larger means you're likely dealing with established companies that in most cases have been around for many years. The next requirement is that the company has a PEG ratio less than 1. Although PEG ratios aren't perfect, it is a good starting point to highlight stocks that could be undervalued or overvalued, and a value under 1 means that a stock is undervalued for that metric. Next on the list, I want to see a company have a PE ratio below that of their sector. The thought here is if the company has a PE ratio below their sector, then there's a good chance if the other metrics are solid that the company will increase that ratio closer to what the average is for that sector. For the next requirement, I want to see a stock that's within 15% of its 52-week low. Once again, this can be a good indicator of a stock that has a lot of room to grow. But if other indicators or metrics are bad, then a stock near its 52-week low could be a bad thing. We'll rule that possibility out, though, with all of the other positive indicators we require. Next up, I lump 3 different items related to stock analysts in my requirements. First, I only want to consider stocks that have at least 10 analysts covering them. Second, I'll consider stocks that have a consensus rating of buy or strong buy. And finally, I look at stocks that have an average price target among analysts that is at least 15% higher than the current price. And the final requirement I have is if a stock does pay a dividend, then I want to see a payout ratio of 55% or less. If the payout ratio is higher than that, then there's concerns about the company being able to use their earnings for growth. And if that percentage climbs above 75%, there could be serious concerns the dividend would need to be cut or possibly ended. Okay, now that we have all the requirements out of the way, on to the part everyone wants to see. The top 5 undervalued stocks to buy in August of 2024. First up, we have Devon Energy with the ticker symbol DVN. They're an energy company that engages in the exploration, development, and production of oil and natural gas liquids in the U.S. Devon Energy has a market cap of $28 billion, a PEG ratio of 0.4, a PE ratio that is 42% less than their sector, and they're currently only 6% away from their 52-week low. In regards to analyst metrics, DVN has a buy rating across 17 analysts and an average price target 38% higher than their current price of $42.18. They also have a nice payout ratio of 39%. Next up, we have Aptiv PLC with the symbol APTV. They design, manufacture, and sell vehicle components in North America and internationally. They provide electrical, electronic, and safety technology solutions to the automotive and commercial vehicle markets. Aptiv has a market cap of $18 billion, a PEG ratio of 0.98, a PE ratio that is a whopping 183% less than their sector, and they're only 7% away from their 52-week low. In regards to analyst metrics, Aptiv has a buy rating across 14 analysts and an average price target 41% higher than their current price of $68.38. And Aptiv doesn't currently pay out a dividend, so no need to look at a payout ratio because they don't have one. The third stock to shoot up soon is Magna International with the symbol MGA. They design, engineer, and manufacture components, assemblies, systems, subsystems, and modules for original equipment manufacturers of vehicles and light trucks worldwide. Magna has a market cap of $12 billion, a PEG ratio of 0.48, a PE ratio that is 29% less than their sector, and are currently just 1% away from their 52-week low. In regards to analyst metrics, Magna has a buy rating across 17 analysts and an average price target 41% higher than their current price of $40.51. Their current payout ratio is 54% in relation to their current dividend. Our fourth stock is Schlumberger Limited with the symbol SLB. They engage in the provision of technology for the energy industry worldwide, and the company operates through 4 divisions: digital and integration, reservoir performance, well construction, and production systems. Schlumberger has the largest market cap of this group at $66 billion, a PEG ratio of 0.9, a PE ratio that is 8% less than their sector, and they're currently only 5% away from their 52-week low. In regards to analyst metrics, Schlumberger has a strong buyer rating across 19 analysts and an average price target 50% higher than their current price of $44.64. And their current payout ratio is at a nice level of 36%. And finally, the last stock on this list is Global Payments Incorporated with the symbol GPN. And yes, this was the one stock on my list from my previous video that hasn't gone up, but they still have solid metrics, and I feel this stock will see significant growth soon. GPN provides payment technology and software solutions for card, check, and digital-based payments in America, Europe, and Asia Pacific. GPM has a market cap of $25 billion, the lowest PEG ratio of the group at 0.34, a PE ratio that is 38% less than their sector, and they're currently just 4% away from their 52-week low. In regards to analyst metrics, GPN has a buy rating across 29 analysts and an average price target 54% higher than their current price of $95.02. Their current payout ratio is at a solid 20% in relation to their dividend. Well, that's it for this video. We reviewed 5 undervalued stocks that are set to shoot up in the near future based on several different factors. Let me know in the comments your thoughts of any of these stocks and if you're invested in them or looking to invest in them. As always, thanks for watching and hanging around to the end. Don't forget to like the video and subscribe so you know when I put out new content focused on your money and how to manage it best. See you next time.